Now, there's been a lot of talk about Bitcoin coming to the bond market in the last few weeks, but the most interesting area is the idea of a bit bond. Sam Lyman writes for Forbes that bit bonds are like regular bonds in the sense that the Treasury would allocate 90% of the bond to fund the government. It's normal. But it would then use the remaining 10% of funds to purchase Bitcoin. Now, upon maturity, investors would receive 100% of the Bitcoin upside, up to 4.5% of the total compounded return. After that benchmark is reached, investors would then receive 50% of all remaining Bitcoin upside. Meanwhile, the government would keep the other 50% of remaining Bitcoin upside to supply the strategic Bitcoin reserve. Now, this graphic right here from the Bitcoin Policy Institute shows exactly how they would work. And I gotta say, this is obviously a very clever idea. And there's even rumors that the US government is looking at whether they should issue bit bonds to address the national debt. So here's the deal. Bitcoin's a magnet for capital. The bond market wants to play with the new shiny toy on Wall Street. There will be no stopping this asset from getting cozy with one of the largest pools of capital. Bit bonds are interesting. Structured bonds are interesting. And there is going to be a plethora of brand new bonds related to Bitcoin that we haven't even thought about yet. We're so fortunate to be living in this moment. I can't wait to see what people come up with next. We now know that Bitcoin is a dark, dark hole. It simply sucks up liquidity into the asset, and the bond market is knocking on the door. And my guess is that we're going to see the Bitcoiners assault the bond market next.